This is your host, George Huss, and this is the 401k Owner's Manual. If you enjoyed this free episode, please show your support by leaving a rating and review here at iTunes. I'll make sure to give you a shout out on an upcoming show to thank you. That being said, here's to Todd Ramsey for the comment on iTunes and to Amy Bonnert and Stephen Davis for their comments on the 401k Owner's Manual Facebook fan page. So let's begin. Today we're going to do something a little different. A friend asked me to take a look at Bank of America stock, so I thought it may help you, if only to get a look at how to review a chart. Charts are easy to read. They're simple square box graphs. Down the far left and right columns are numbers representing price, and across the very bottom of the graph you'll see numbers representing years. Inside the chart you'll see columns that are filled with either X's, which are prices going up, or O's, which are prices going down. In some of the boxes you'll see numbers 1 through 9 or capital letters A, B, or C. The numbers 1 through 9 represent the months January through September, and A, B, and C represent the months October, November, and December. They're there for reference only because these charts measure price movement, not time. Okay, let's get back to Bank of America. For those of you following along on the video, what we see here is a typical chart formatted for a stock which is trading below $20 a share. Notice the value of the box sizes. From 20 on up, the value per box is $1. From 20 down to $5, the value per box is set at 50 cents. And below $5, the value per box is 25 cents. You can see the bank traded to a high of 1950 in April 2010. Throughout 2010, the stock trended down to 11. It had a brief run to 15, but couldn't break through the downtrend line at $16 a share. The decline continued throughout 2011, where the stock seems to have bottomed out at $5 in December. In January, there was a 3-box reversal to $6.50 a share. The stock continued up through March, where it stopped at $10 a share. In April, there was enough supply to push the price down 3 boxes to $8.50 a share. From there, it continued down to $7 a share. There wasn't sufficient demand for the 3-box reversal up until September, when the price reached $8.50 a share. Demand continued to push the price up through December to the price of $10.50 a share, where it is on the chart today. Overall, the stock is still trading below the downtrend line, which is at $12, and the chart is not particularly attractive, except perhaps for someone who's bottom fishing. Now, assuming an investor has a compelling reason to be a buyer of this stock, it makes sense to look at it in a different perspective. We'll do this by adjusting the value of the box size to 25 cents for the entire chart. This will change the downtrend line and give us more column changes so we can determine if there's a pattern we can use to better measure the risk-reward of the potential investment. We've not changed any price history. The significant observation looking at the new chart is there's been sufficient demand to have broken through the new downtrend line, although the trading is still a bit choppy. From the $5 low in December 2011, the price moved straight up to 10 by March 2012. It then reversed and fell straight to $6.75 through May. It reversed up and stopped at $8 by June, reversed down in July, stopping at $7, and reversing again in August to $7.75, with demand pushing the price to $9.75 in September. The price reversed down before October to a low of $8.75, reversed up in October to $9.50, reaching $9.75 again in November before a quick 3-box reversal down to $9, followed by another reversal up to test the $9.75 level. In December, it did break through the previous resistance at $9.75 and has since moved to the new high of $10.50 on the chart. The comment I made to my friend was if he wanted to be a buyer now, he could wait for the Christmas sale. I further explained, looking at the chart, you'll see there will always be a pullback because supply doesn't sleep forever, which is evidenced by the columns populated by O's. I can't say this is a chart I love, but if there's a reason to be a buyer, I, for one, would wait for a pullback, perhaps to the 975 or 950 area, because I would view the old resistance of 975 as a new level of support until the price action told me I was wrong. Below that level, there seems to be support at the $9 level, and below that at 875. Said another way, when the price reached these lows in the past, there was sufficient demand to drive the price back up. There's no way to predict if that demand still exists. You just have to wait and see. If the price fell below that level, there's no support until the $7 and $6.75 level. Again, to add some perspective, a buyer at 1050 would be looking at close to a 20% loss from 1050 to a logical stop loss point at 850. If you wait for a pullback to buy at, say, 950 and the same stop loss at 850, that takes the potential loss to around 10.5%. It's not great, but that's significantly better. That's the risk of buying stocks which are trading below $20 a share. Small dollar movements can translate into significant percentage losses rather quickly. Okay, that's all we need to say about Bank of America for now. I'll get the complete transcript posted to our Facebook fan page, the 401k Owner's Manual, and our website at yourwealthpreservationcenter.com as soon as possible. If you want to see a particular chart of an investment in your 401k, here's what you can do. Click like on our Facebook fan page and post a request there. I'll message you a private link to grab it. Thanks so much. Until next time, I'm George Huss, and this is the 401k Owner's Manual.